Hi everyone, here I am again, Pablo Galarza with Century 21. Today we brought in Maggie Martinez with Rate. Maggie, tell the audience a little bit about yourself.
Thank you so much for having me. Well, my name is Maggie Martinez. I wear two different hats at Rate. I'm an area manager, and that gives me the blessing to lead a sales team. So I have a handful of loan officers under me that I help support and mentor as they need. And then I also run my own production team every day, which is pretty much mainly like what I love doing the most because it's what's given me all the opportunities that I have. So I'm a loan officer at the end of the day, right? I sit in front of clients. I help them navigate the different options that they have to purchase whatever it is that they're doing, whether they're first-time buyers, they're buying for the second time. And most recently, we talked about, right, helping our investors grow their portfolios.
And you were an agent before too, right? And you got you see the best of both worlds, right? From agent to learn, and you did great on both. But and of course, a loan officer, you're exceeding. I think we came in here last week. You had an interesting subject that I really wanted to talk more about because we've been for 2025 we've been hitting more investor sales for and my team. I think we got about 20 to 25 rehab sales already closed for this year. So we had 25 purchases, and so these guys are moving pretty quick. The problem we're having is we're running out of money. They want to go from 5 projects a year to 10 projects a year. We can't. But when you brought this up, you brought something up that I want you to talk about today.
Yeah.
It opens up the cash flow to allow them for more projects, which in the end is going to help everybody else make more money.
Yeah.
Tell us about them.
Yeah, no, for sure. So, first of all, congratulations, because that's not.
Oh, thank you.
You know, I think the opposite of you. I think the problem is not the money. We can find the money. The problem is finding somebody that can guide you through that kind of transaction. In my book, at least, right? So, the fact that you're seasoned and that you're able to guide your investors, because I feel like that's where. In my opinion, for what I see every day, like investors have a hard time leaning into a project because they want to get a little bit more validation of like, am I buying the right house? So I think you're the essential piece. So I think we're going to make something happen here.
And our biggest issues we have is, we have a program set up for them. We don't take on just anyone, of course. If you just start a rehab, we're like, hey, you know what? You got to get some things together. We're the same way as the banks, right? Like, hey, you got to have some proven closings on this before we embark on it. Or if you don't, then you got to follow the rules of the game. So we have our own rules we set up for our investors. Say, hey, this is what we like to do. In order for us to guarantee a return, you got to follow what we're asking you to do. And it could be it's all about team structure, right? Goes from us to the attorney, to the title company, and now everything's been cash.
Yes.
So bringing a loan officer into this will be the first time that I'm actually telling you that. I mean, we have hard money lenders, which I'm not a big fan of. However, it happens, right?
Why are you not a big fan of hard money? And I'm gonna tell you about my program in a bit, but I think most investors, when they're looking to flip, they lean into a hard money lenders. But tell us why you, with experience, that's not your.
Well, one
favorite.
is, of course, the amount of points. And in some cases, they want 2 points up front, 2 points in the back. Some of these guys are walking away with 20 grand at the end of the day. Well, that's all the profit. So what's the whole point of doing a rehab project when you're giving away 20 grand just to get the money to do this for a couple months? That was one. Second is the hard money lender wants you to give them the ARV, right? The way they calculate the ARV is going to be based on how much money they have. So they say, oh yeah, I love your ARV because we need more people. But as soon as they get too many people, oh no, your ARV is not good. Okay. So it all depends on how much money they're able to use or to let you borrow in order to make it happen. If they're overextended, no matter what ARV you give them, they're going to probably just put you away. They said, no, you're going to have to wait. That's not going to work. So you'll be wasting a lot of time. So there's a lot of time involved. That was my experience with it. I don't want to give anyone, $20,000, $30,000 or whatever the case may be to let me borrow money. I don't mind a couple of points up front at the beginning, but when you do the resale, you're at $400,000. 2 points is $8,000. And you're giving that to whom? For a couple months, and then they have a lot of rules and regulations. So hard money lender is not really
unless
cash.
you really need it. Okay.
Yeah. I mean, it's not cash. So
the product that I was talking to you about is that we have an investor. So at Ray, we have a lot. We actually have a huge gamma of non-qualified mortgage products, which a lot of different products fall under that. But specifically to this topic, we have a fix and flip option, and this one was enticing to you because you work with seasoned investors. And the cool part about this program is that you can get You can lock in to get the funds that you need with 10% down for acquisition, and then you 100% financing for repairs, which is huge.
Yeah. Do they require that ARV, that CMA, I guess, it shows them, hey, why is this battery? Is that
Well,
something
it isn't. They are going to go off of. They're going to look at the after repair value. Yes.
Right. And I guess what got my interest is that it doesn't have to be just, well, that's the fix and flip, right?
Correct.
That's one, and then you have the other one that's SR.
So that's a fix and flip, because the nice thing about the fix and flip, I mean, it is a great deal. I mean, all you have to come in up is 10% of purchase, which most flip loans, they're going to ask you anywhere from 25 to 30%. I haven't seen anybody advertise anything below that, and it's 20 to 35% from acquisition and repairs. So, which is, it's a lot more money, right?
I like that.
And and the product that we have right now is 10% for purchase, and then 100% financing for repairs. So that leaves the window open. But this is a product for seasoned investors. You do have to have under your belt 4 properties completed in the last 3 years.
Okay.
So it's not going to be for your first time flipper, like the people that are flipping for the first time, because again, right, it's more risk. It's like everything, right? And I think a message for, because I don't want to discourage anybody that wants to get in the game, right? Because obviously we all have our new beginnings, cliche. But there's going to be products for that. And one of the things that I want to tackle on, that I want to share, because I hear, even in the industry, there's a lot of agents that are like, I want to start investing. I want to start doing a few flips.
Right.
And it's like, how do I do it? How do I come up with the funds? And the reality is, guys, that when you're starting with anything, you have to have some skin in the game. Yeah. You know, they're like, hey, I heard that some people do it with other people's money. I'm like, well, let me know, because I
started about 18 years ago doing flips, and
how did you start?
But I love what you said. I think you said it last week. Like, flipping is not supposed to be an agent's bread and butter. It's supposed to be supplemental income.
Yeah.
It's a secondary, because I've heard about agents like, oh, you know what, the flipping thing, I could just do this all day. I don't want to deal with clients. And then it's a way different business, you know, because they think that flipping's easy. You go over there, and then you just see the guys. Well, that was easy for me, because that's like, you know what, I had my contractor here. You go over there. I went to the property maybe 3 times, in the beginning, in the middle, and the end. That was it. I didn't have to go pick up material. But then when you make it a full-time job, well, who picks up the material? And what about the guys don't show up? What about this?
No, and then you're trying to get the most profits out of it, right?
Yes.
Because that's your income. That's how you're keeping the lights on in your house. And I do think that, I mean, if whatever feel you have, whatever is providing, I think a lot of people, you know, they stay away from the work. And you're not going to be able to get to your dreams and hopes and like this moonshot goal of a career that you want if you're not putting in the time on a daily basis. And for us, for you, it's real estate, it's servicing other families. For me, it's doing loans. I love to do other stuff. Like I have an investment property. Okay, this is actually a great example. I have an investment property out in Michigan who I actually think for what I need is doing great.
Right.
But I'm not nickel and diming that property because I don't have the time for that.
Right.
People are like, oh, don't pay a management company. Why don't you just do it yourself and hire the cleaning lady on the side? You know how much time that's going to consume out of my job that pays my bills and funds everything that I do?
Right.
My biggest investment is my career, right? I take care of my career before anything else because that's what's giving me to do all the other stuff. But going back to the conversation about this specific product, which I know you were excited about, there's another product that I'm crazy about and I love it, and we've been using it all year. I personally as a lender have had more business too with investors. I don't know if it's just because of it's just the age group, and like now I'm just more mature all around, not just as a lender, that I'm having different conversations and the people around me are doing different things. But DSCR loans, I love them. A DSCR loan, all it is if your personal income is tight, if you don't have enough income on paper, but you want to buy an investment property and you don't want to sit here and have to go to show the lender, your taxes. If you have multiple properties, because the more properties you have, guys, you have to strategize with your taxes, because that's going to protect your buying power. I don't want to go too much into that conversation, but it is a very important piece of being a business owner, period. You got to pay attention to your taxes, right? Because sometimes you doing an extra project, but if you're not aligning your taxes, you might end up paying, half of your profits in taxes to the IRS if you're not paying attention. Yeah. If you're not paying attention to that, so you can go do a flip, make $50,000, but if it's not coming down to your taxes at that end of the year the right way, you're gonna give that the $50,000 all of a sudden is gonna shrink to like $30,000, and that's something that I find out or whatever it is, right?
Yeah,
but you definitely have to make sure that you're strategizing from that angle as well. So in order to avoid all of that, if you are somebody that does have the down payment, you can lock in a property as long as the cash flow pays for the mortgage with 75 LTV, which is 25% down. And that's for residential.
I think one of the things that
we don't look at income, we don't look at anything. We only look at credit score.
Right,
that's the nice thing
and
about it.
That's what I liked, is that there was limited docs, but as long as you prove that you have a couple of properties you've done, you've been successful at them, but let's say you already bought one and you're only limited because you can't buy another one because there's no more cash and that's all you're buying with, well, what bank is going to say, hey, we'll finance it for you, you've already done these projects, give us 10%, we'll take care of the rest.
Yeah.
And that's what I wanted to talk about. Hey, you know what, with that type of program, well, that's awesome, because if you only need, let's say you buy a property right now for $100,000, right? You're going to turn around and sell it for $300,000. Now, the 10% is of what, the $100,000 or is it off the $400,000?
The 100.
Okay, so you don't have the $100,000, let's say you got $10,000 down, right? Mm-hmm. Now they're going to lend you the other $100,000, so it's the $90,000 to buy it, and they just say your budget to rehab it is $120,000. So they'll lend you the 90 plus the 120, which is the 210, right? So now that's, I guess, my question, not the 300, but is the 10% of the 210 the total invested? Just the purchase. And they'll lend you the money for the purchase and the rehab, and then all you need is 10% on the purchase. That's phenomenal. I mean, like you said, that's what I want to tackle and say, all right, let's talk to these guys about this. So we're going to do our little thing with our clients and our rehabbers on November. And see where that takes them, because that's going to open up some more cash. It's going to give them a chance to keep the guys working. Yeah. Because some of these guys would only do one project, and then they have to wait till it sells and resells. Then they go to the next project. So they lose some of these guys.
Yeah. If you have the experience. Yeah. Because that's a big part of this, right? For seasoned investors, and you have $50,000, you could. Essentially, I mean, this is obviously only talking about the down payment, right? But you could comfortably do 2 properties with $50,000.
Wow, I'm thinking 3 or 4. Can you go?
You can only get one at a time. Assuming you could do more than one at a time. But I'm saying, assuming they're $100,000 a purchase, right? Because there's closing costs too.
Right. Of course,
right? So like with 50.
Okay. But going back to that, so you buy one for $100,000, you put 10, and then all of a sudden, in the middle of rehabbing this one, you see another one. Can you do another one? Mm-hmm. And they won't. Okay, so it's another 10% again, or is it now you need 15%? 10%. 10% again, huh? Yeah. What's the limit? I mean, how far can you go?
You know what? Actually, that's a great question. I don't know. I'm gonna have to get back to you on that.
I mean, these guys were doing 8 a year. If they want to go to 16, is that something we could look at? Because with 10%, 10%, and they're financing the actual repairs.
That's a good question. I'm going to get back to you on that, because I think there's also going to be like the leverage of like the bandwidth they have, right? Because
right. Because in that case, what stops us? Why would you buy anything cash? We just do 10%, 10% all the way across until you got 10.
Look at Pablo. He's like, cha-ching.
Yeah, I mean, it's open. That's why we want to make sure that the information. Let's say, listen, you're going to be limited to this, or here's your total, so that they know. Because
that is a good question.
Yeah, I like to know.
How many can you carry under your belt?
So
you and me both.
I did a lot of rehabs, but we didn't have to buy the building. I just kind of stayed here.
So tell me how you started doing your rehabs for the people that are.
Well, we went off the basics that all we need at that time was financing. So we used the financing, and that was before the market crashed. So they were financing everything, like whatever we could get. So it was like let Home Depot and Menards and everything pay for the material. All we have to do is worry about the labor.
What do you mean Home Depot pay for the material?
Oh yeah, So Home Depot, like all the material, right now, well, it's different now, right? We let the general contractor handle the entire bill. Here, it's a budget.
Right.
But before, it was my brother and I. We used to team up, and then I teamed up with somebody. Because it's a little hard to do it yourself. You need money to buy the property, and then you need money to rehab it.
Yeah.
So teaming up with my brother, we'll look at the cushion. After you look at the ARV, you say, okay, well, there's 60 grand. Hey, we'll walk away 25 each. Let's do it. It's no problem. So it was when the market just started getting back on its feet again. We started doing something different. Anyway, so to make the long story short, we used our credit cards for all material, Home Depot, Menard, and we had the actual contract was a good friend of mine, and sometimes we'll make, hey, can you wait, 10 grand, 20 grand until we finish it?
Right.
So we had some leeway, and then once you did the first one, we had some money, so then we used it again. Then you do the second one, and it just started getting, and then we nitpick everything. We were actually in there doing some demo ourselves to save money, doing our own landscaping, and I found out real quick, like, that's not saving money, I'm losing money. I'm not going to spend a couple hours in this building and then not out there with clients.
Yeah.
So I stopped that. I said, no, I'm not doing that anymore.
Yeah.
So why focus on cutting grass when I could be in the office doing something different? Anyway, so that was the starting point, right? So that helped us a lot. And then when I finished off my rehabbing, I stopped about when I bought this building and I started doing something different. I was actually just, I'll get a general contractor, one of my good friends, and I said, look, just give me the budget. Stay on the budget. I already know what the ARV is. I'll go see it. I'll go see it in the middle. And then at the end, when it was done, we'll do our checklist. And, it was that easy. Yeah. I brought my brother in a couple of times on that, and my younger brother in, but after a while, I think let these guys do it. I mean, I'm good at it. Thank God. It was always it was all supplemental income. That was my vacation money and my little extracurricular money. But we used it for a lot of time.
My pocket money.
Yeah, and it was. But then we used it, of course, to buy the building and stuff like that. Yeah. So it worked out well. But the knowledge stayed with me, and I'm able to help my new clients and educate them the right way. We learned that there's more things not to do than to do, because you just have to follow just basic things to make it work.
And it's like everything else. Every transaction is going to come with its own bag of learning, a learning curve, right? Because not every transaction, every purchase is going to be the same. And you learn to cover your bases with the experience you have. And, you're essentially a testament to the first time you do something, you're going to be just kind of figuring out how to finance your project, right? You're not going to qualify for, for example, the project I'm telling you about now. But I always tell people, listen, even if on your first deal you walk out, if you break even, you're already lucky. If you're breaking even,
or $5,000,
or $5,000, or 20 grand, great. If you do better than that, amazing. Right. But if you don't be bitter about it. You're learning experience. Exactly. You're learning to build a capacity within yourself to take in a project of that magnitude. Yeah. And the more you do it, the easier it becomes. The more knowledgeable you are, the faster you're at picking, the property that you're going to tackle and all that good stuff. So. It's still a win because even if you don't make a lot of money, you won experience. Now you know what it took to get that first one. The first 2 or 3 are going to be a little tricky, because people are going, you should do this and you should do that. You should hire your dad. You should hire your brother. And you never hire family. So that's one of the things. Don't hire your family. Hire the experts. Don't try to take the shortcuts. But we'll talk more about this. I'm actually training more agents on that little by little so they can start talking to everybody wants to be a rehabber until they start seeing that it's not that easy. Yeah. It's not that easy. It takes a lot of work. It's very nerve-wracking if you don't know what you're doing, if you don't have the right people or the right who's to make that work. So, but we're gonna sum that up today. We'll talk more as we move forward on these type of, and we'll see where it goes. And we're gonna start putting it together for a couple of clients. Yes, we are.
And we get some testimonials on that, and if that works out, we're gonna. This market's where we want it to be. The sky's the limit. So thank you, Maggie, for coming out and joining us. I appreciate that. And next week, we'll see what the guys bring to the table. And we'll see you guys again. Any questions or for Maggie, just feel free to give her a call. Her information is going to be on the bottom. And we're here if you have any questions in regards to flipping. You guys have a great day.